this horrible pandemic that we're dealing with, that people still have a need to buy and sell real estate. So good news for us on that. Also want to remind you that our offices may be closed to the public and may be locked, but they're still available to the agents to use. We want you to kind of treat it like your pain medication. Only use it when you need it, but don't try to show up to the office on a regular basis just to have something to do. And then, of course, every day at 10 and 2, we have our virtual office where we have a number of brokers that are looking for interaction and people to talk to. So we'd love to see you on those. Simply go to our Signature Agents Facebook page, click on the announcements tab, and you'll see the link from Brandon. And come on and join, bring your transaction issues and your personal problems. We can help you fix both. So we've got a pretty dynamic panel to talk about today, and I want to welcome a pretty special guest. We have Chris Biaggi, the owner of All Western Mortgage, with us, and Chris is going to give us an update on the mortgage market. Hello, Chris.
There we go. Good morning. How are you? Great. Appreciate the opportunity, Brandon and Chris. Thanks for giving me the opportunity to speak with you today. So obviously lots of things happening in our industry, and a lot of those are impacting you as well. I'd like to cover a couple things that I think might be of interest to you. First thing I want to cover, and we'll jump right into, is forbearance and deferrals. So this issue of forbearance and deferral, it's all over the news. I'm sure that many of you are being asked about this by your clients, friends, and family. And so I just want to kind of start with some basics. You know, forbearance is a situation where a mortgage company will allow the borrower the ability to delay making payments for a specific amount of time. So what's really going on here? So I'll start by giving you a stat. Mr. Cooper, who is one of the largest non-bank servicers in the country, placed over 86,000 loans in forbearance in just the first week following the CARES Act coming into effect. You know, what will these forbearances look like? Well, we don't really know. Even if you go on Mr. Cooper's website, it's not specific, and I think that it will more than likely boil down to being case by case. But you know, from our side, you've probably heard that, you know, forbearance is not a forgiveness. I'm sure we will see a variety of deals being offered, from balloon payments due after the forbearance period to some sort of a payment plan. And we will see how that plays out over time. But one of the concerns that I think we all have is that there is no proof of hardship required, and that people will take advantage of this opportunity. You know, theoretically, a borrower can call up and just say, I need a forbearance, and they would get it, even if fully employed and capable of making the monthly payment. So, you know, we would all agree that those in need of relief should get it, but, you know, are the rules in place the way to do this? I'm not sure. Many in our industry feel that there should be some burden of proof, and that the borrower should be required to demonstrate a hardship due to COVID-19, but at this time, we are still using the honor system, which is interesting. So, you know, how does this impact our industry and possibly the consumer in the end? You know, first of all, it's going to create instability in the servicing space, which, you know, honestly, it's an area of our business where we tend to see challenges, even in the best of markets. I'm sure you've all heard complaints from your buyers and so forth in this particular part of our business. So, you know, I'd like to take a step back and make sure that we all understand exactly what happens when borrowers don't make their payments. And I'll run through this quickly. You know, first, it's important to know that all Freddie Mac and Fannie Mae conforming loans, along with FHA, VA, USDA, they all ultimately end up becoming what's called a mortgage-backed security. And that is sold to investors. Large investment banks, pension funds, as well as the federal government own these mortgage bonds. So even though you might make your payment to Mr. Cooper or Wells Fargo, they don't technically own your loan. They are simply servicing the loan by collecting your payments and distributing them as required. So how it works in a normal market: payments come in, principal and interest payments are made to the underlying bondholder, taxes and insurances are paid as required, and the servicer keeps their fee along with a small amount of spread on the interest rate between what the borrower pays and what the bondholder is receiving. Seems pretty simple, but what happens if 86,000 people stop making their payments all at the same time for up to a year, as is being discussed? And what happens if millions of people stop making their payments all at the same time for up to a year? So keep in mind that Mr. Coopers of the world still have a contractual obligation to pay the bondholders, to pay the insurance companies and the county tax bills as they come due. Well, at some point, poor Mr. Cooper, he runs out of money and cannot pay the bondholder, cannot pay the insurance on the home, cannot pay the taxes on the home, and maybe Mr. Cooper is forced out of business because of all this. So the final outcome is unknown, and it's quite possible that these servicers find a lifeline. But in my opinion, causing them to fail helps no one. It's going to create additional chaos for millions of people, chaos for these companies, and ultimately it could cause the transfer of a lot of loans to new servicers, which I think we all would agree would become a real challenge for the consumer. So that's going to be interesting how it plays out over time. The next topic I'm going to touch on briefly, and then I'll end my time here, but it's kind of the overnight disappearance of mortgage products. And I know this is something that may have already impacted you on a transaction, but a lot of this happened quickly. And it will continue to narrow the field for borrowers. And I think it's important, we all understand over the last few years, we gained a lot of ground in the area of new products. Many buyers were again able to qualify for loans as we rolled out non-qualified mortgages or non-QM loans as they were called. And these programs allowed for a lot of flexibility. Bank statement loans, no ratio investment loans, and others really opened the doors for a lot of buyers. Unfortunately, these products have been rolled back and are currently unavailable. So now what? Are there still loans out there for these borrowers? And I think that with all this change, it's important that you become familiar with our private lending division. And this is something that Shelly and her team can really help you with. The products that we offer will bridge that gap caused by the loss of these certain products and give your buyers an alternative. We will use bank statements here. We will allow for less than perfect credit, and we can get very creative in deal structure and ultimately borrower qualification. So I know that many of you are going to find opportunities for buyers in this market. And I think it's important that you have lending opportunities and options available to support your efforts. So please take the time to speak to Shelly and her team about these programs. So I'd like to finish by saying, sort of an observation and what I'm seeing throughout the industry here is, now more than ever, having the right lending partner is critical. Anyone can close a loan when things are easy. Anyone can close a transaction when things are easy, but it's times like these that teamwork between agent and loan officer, this is what's really getting deals done these days. So I just want to tell you, I'd like to encourage you to speak to your Prosperity Lending team. Shelly and her group have everything it takes to navigate you and your buyers through this very challenging market. So I think that's the end of my time. Again, thank you so much for allowing me the time to speak today, and you all have a great day.
Chris, we really appreciate your time and your information. Just a quick question, if you don't mind. What do you think the mindset is of the mortgage industry right now? And I know that you said innovation and being there when times are tough really is a sign of a great company. With all these products disappearing and the media spinning, different loan programs that are restructuring, what do you see as the real mindset of the average, mortgage company that's out there and what you're seeing?
I think everybody's taking a very defensive position, and look, we're not too far away from the financial crisis, right, of 2008. So a lot of lessons were learned there, and quite honestly, some of those lessons have really helped banks. Part of Dodd-Frank was the requirement for additional liquidity, and I think that those requirements are now really proving to be a benefit to in a lot of ways to our economy. So banks are strong. So I think that what we're seeing is a fear. We know what happened not that long ago, and I think everybody is really kind of building a moat around their business. Our goal is to, and I think what we've really tried to accomplish is using the guidance that's been given to us, because we have to play by the rules. We have no choice. Given the guidance that we have, the guidelines that are provided to us by the agencies, to really get as creative and aggressive as we possibly can to give every deal a fighting chance, right? And then obviously we have what we discussed on the private lending division, which I think is unique to our company, and I think again is going to provide some opportunity where it's just not available anywhere else.
Gotcha. And just one follow-up question to that. It's a common theme we're going to talk about. Not knowing when the state will reopen and jobs will start up again. In your opinion, if the startup happens relatively quickly, let's say middle of May, Do you think the recovery will be somewhat quick, or do you think it'll be a slow road back?
Unfortunately, I'm seeing a slow road back, and I think ultimately it's because, especially here in Las Vegas, right? We are so heavily service industry based. We've tried over the years, and I think we've done a better job at diversifying our economy, and we see some of those businesses here today that were not here, 5, 10 years ago. The problem is going to be the consumer and how quickly they are comfortable coming back into these environments. So I think what we're hearing, and I have some friends that are in positions to give me this information. They're anticipating that, as the demand is there, they will staff accordingly. And so ultimately, that will be the driver. You'll probably see a slow ramp. Certain percentages of every department, every team will be invited back to work, and then ultimately, you become full capacity at a certain point. But it could take some time for us to get there.
Sounds good. We really appreciate your time, Chris. And I know Shelly and her team do an amazing job, and they're here to answer all of our questions. And I'm sure as the meeting goes on, there will be a lot of those. So we'll definitely want to take time for that. But thank you again for your time.
Great. Appreciate everybody. Have a great day. Thank you.
All right. So leading on in the same train of thought about the market and what we're seeing, we have two special guests from the Nevada Association of Realtors, two good friends of mine that help me out every single day. I want to welcome Teresa McKey, the CEO of Nevada Realtors, and Tiffany Banks, our Chief Legal Counsel. I really appreciate your time today, and I know you guys had to get dressed up and head to your living room so that we could spend some time together, because I know that's my daily routine. But want to thank you two for what's going on. Teresa, I'm going to start with you just on a couple of questions. In your opinion. Just like I was asking Chris, we've seen across the state realtors talking about what's happening to them, and we've had a number of items that have come up to the state association. What do you kind of see as the state theme and what's going on around the state?
There's just so much going on, and we're trying to pump so much information to the members. It's just a ridiculous amount, and we hope it makes sense to everybody, that resources are easy to find, because there are a lot of questions out there. We started out looking at, is real estate an essential service? And we were able to lobby the governor's office and got a positive outcome for that. That was number one, most important. The second real issue that we faced was, what do we do about licensing and education with the real estate division? So again, between Tiffany and I and our lobbyists, we were on the phone with the administrator for the real estate division almost daily, and figured out a couple things there about license renewals. They had a problem with an illness in the office, so they had to completely close their office for 2 or 3 weeks, which clogged up some license transfers that had to be done by mail. So I think we successfully navigated that. Now, of course, it's just a huge amount of other types of information. I think number one is still working with the governor's office to make sure that we maintain a viable business model in everything we do, that is ultimately protective of not just ourselves and our industry, but also consumers, number one.
So let's talk about that process, because it wasn't like we just picked up the phone and made a call to the governor. It's been years, if not decades, of positioning ourselves as an association and the process in place. Talk a little bit about how that all came together, because I think the average member probably doesn't know.
Sure. So going back to the very basic concepts, the state association, your state dues, a large part of that money goes to our government affairs programs, and the state provides all of the government affairs directors. In Las Vegas, you have Joe Bresney and Joe Locatelli, and the state association actually pays for their salaries through the contract with Carrera Nevada. So over the course of, you're right, decades actually, we have built and continue to build our strength with state legislators, with the constitutional offices like the Attorney General and the Governor's Office, Secretary of State. And so because we have spent a lot of time building that, we contribute to Realtor Champions at the legislature by giving their campaigns money. We have built a network that we are able to access using heavily Carrera Nevada, Rocky FinSeth, for those of you who know Rocky. we have a great relationship with a lot of the right people. The Speaker of the House, we're very close with as well. And so when these issues started to arise, are we an essential service? The Attorney General's office actually reached out to us in part saying, hey, something's coming down the pipe and we want you to be a part of it. We need your input. And so we had a lot of juice already in having the right connections with the governor's office.
Yeah, for sure. It definitely doesn't happen over a course of a couple of weeks. The information that we're getting now happens in an evening, and it's kind of like phone and say, hey, guess what? We're thinking about doing this, and you have to react to it. So tell us what that's doing to you and your staff. I know you guys are working remotely. How are you able to keep all that together?
It's been absolutely crazy. I feel like me and my staff are more busy working remotely. Everything takes a little bit longer, of course, but just handling the huge amount of work. We got a call, was it, I think last week, Thursday or Friday, from the Attorney General's office, of course, through Rocky and Carrera, and said, the governor is going to make a new directive and we need your input within 45 minutes. So I got Tiffany on the phone and we rallied and came up with some language. No language is perfect these days, but we're able to include some very protective words and phrases and policies for the governor in his directives.
So let's talk on a national level. I mean, or statewide. A lot of agents have been asking about some of these loan programs that are out there to keep their small businesses afloat. And I know that there's been a lot of conflicting information or misinformation. Shed some light on what you know and what you've heard nationally and what you know on a local state level.
Sure. Basically there's three places you can get money. Two of them are with the SBA. There's the Paycheck Protection Program, and then the EIDL loans. There are some great resources nationally. NAR, the National Association of Realtors, has a great FAQ section, and you can reach that by going to nar.realtor/coronavirus and then hit the advocacy tab, and down at the bottom there are FAQs that they get on a national level that they update every day. We also partnered with LVGEA and some of the chambers. There's a whole host of people that are partnering now for a webinar that's actually going to be this afternoon. And the speaker is actually the Nevada Regional Director who is going to host. His name is Joe Amato, and he's going to host this webinar. I forwarded you, Chris, the registration information. Okay. And that's at 2 o'clock today, and he will give a presentation. I think this week is mostly on the Paycheck Protection Program, but you're able also to ask him questions, of course, in webinar style to get that. I would suggest, if you're on this call, go and apply for these SBA funds as soon as possible, because they are going to be gone. There is a great desire for them. A lot of people are already putting in for them. As an independent contractor, you are eligible for a lot of these funds. We're getting clarification all the time about how it applies to independent contractors because you don't get a salary or a wage, you get commission. But there are resources there to apply for. And go and apply now because otherwise you lose your opportunity. And the third prong, of course, is unemployment for independent contractors. That is a real challenge because unemployment offices, of course, are not set up to process claims from independent contractors. So across the country, when I checked last Friday, only 3 states had managed to put this into operation. And those are over on the East Coast: New York, New Hampshire, and Vermont, I think. Our state is manning up. They've hired 100 people for their call center because they are just flooded with unemployment claims. And even just the regular salaried hourly unemployment claims are overwhelming them, let alone contractors, independent contractors who apply for this as well. So we will let you know as soon as we know when they get that up. We're anticipating probably at least another week. If it's sooner, we'll blast that out. Of course, talk to Chris and Brandon and your other brokers because we'll let them know as well, and apply for that because it can help you also.
So we're kind of blessed because both you and Tiffany, hey Tiffany, you're still there? You guys are attorneys, and so luckily we get a great legal perspective. Tell us a little bit about some of the legal issues you guys are seeing across the state. And I know, Tiffany, you're going to share with us a little bit about the property management issues that we're seeing. And I know that our agents are definitely caring about their tenants and landlords and what they're dealing with. Either one of you can take that one away.
So I'll just tell you a little bit about, so Teresa and I, we love what we do. And so, like we'll get off of the phone call from working on language and we'll be like, that was so awesome. Like we'll text each other. So we're lucky to have that great relationship. So she has the information coming from a lot of different directions, and I know she works with the AEs on a national level, and in part I work with the general counsels for all the real estate associations throughout the country, also as well as NAR. And so it's really great because an addendum will pop up, or language will come up, or best practices, and daily like Teresa's working with the AEs, I'm working with all the attorneys, and we're going back and forth daily. What is your state implemented? When the shelter in place has happened, is your state still allowing open houses? Are they allowing in-person showings? And so it's daily, if not hourly, that we're all collaborating and really trying to come up with what's working in your state, what's not, what are the best practices, what are the guides that we should be putting out, what are things that maybe we don't want to answer on yet until we see how a governor is going to rule. So it's it's this collaborative effort on all these legal issues. And so it's a lot of work, but like Teresa's saying, it's also a lot of fun to be able to work together and come up with what's in the best interest of the members and also their clients. This is a whole huge work in progress, and so we want to update you as much as we can as the information's coming out.
Sure. Now I know with the COVID-19 addendum that we had, it was something that most of our contracts don't have a force majeure clause in it, and so I know it was something that we saw California implement. California's laws are a little different, so I saw that addendum come over. You guys were able to review it and give it some state law guidelines, to get some local attorneys and get their input, and then we were able to roll it out on a local association level. So that was a pretty cool result from your collaboration and working together. Tiffany, we've talked a lot recently about property management issues, and I know that we created at the state level a property management PAG made up of some large property managers. I know that Vandana's on that group for our company. What issues are you seeing that we need to be cognizant of? I know one of them is tenants may not be paying their rent for 2 to 3 months and the bill comes due. What are you hearing from that group?
So the goal of the PAG, and thank you, Chris, for creating it, is really to determine, okay, so today, we're having this information come from, the national guidelines. So the national guidelines are saying for some federally backed loans that you can't evict for 120 days. And then you have the governor's directive for an eviction moratorium, which actually does not have an end date, although a lot of people thought that it ended on April 30th. And actually there is no end date. And so it's really discussing what the difference is between, the types of evictions, what type of evictions are still being handled. So in Nevada, evictions on an emergency basis are being handled. So that means you can still file with the court, and the court will then determine whether your eviction is an emergency. All these different issues about, if a buyer and seller decide that the seller is going to be a holdover and they're going to end up staying in the property for a month after, do they then become a tenant? And then what happens if you try to get them out? Payment plans are huge. And so what we've really kind of determined at this point is it's probably better to create a payment plan once everything has been lifted and once you realistically know and understand what the tenant can afford to pay. Because at this point, a lot of times, it's like, well, they're going to pay $200 a month for the next 6 months, but maybe that's really not reasonable. So our guidance at this point is, maybe hold off, wait and see when kind of the dust settles, and come up with an agreement that the tenant will be able to pay. And landlords can be able to manage. And Teresa can talk a little bit maybe about the work with the governor's office on making sure that those mortgage forbearances were in place in Nevada, because I know some states, all they kept talking about was eviction moratorium, and that also goes back to a lot of the work Teresa's done in our lobbying team on making sure the landlord is protected and the owner's protected, not just the tenant. Of course, they work together, but we didn't just want tenants not paying for a period of time and then landlords being foreclosed upon.
Absolutely. Teresa, please.
Right, and so that was one of the benefits of being asked to participate in this discussion with the governor is we got to look at what they anticipated was going to be the directive, and then we're able to also put in some language, like Tiffany said, their language was strictly protect the tenant, protect the tenant. They hadn't thought about especially the mom and pop landlords who rely on each month's rental payment to pay their mortgage. And so we work to get language protecting the landlords, the owners, the homeowners as well. Again, really critical that, you know, people sometimes don't think about the cascading effect of some of these directives. Yes, tenants need protection, people need homes, but in order to have people stay in homes and have homes, you need to protect that property right all the way down.
Sure. It's a great point. And I think it goes back to the roots of why we invest in our PSF, why we invest in our industry, because if it wasn't for us having that seat at the table, so to speak, none of that would have been thought of in advance. It would have been a reaction. And so really applaud all the hard work you guys have done with that. Talk to us a little bit about what you're seeing on a state level with some of the local associations and how they're reacting in their marketplace. I know we've seen in Las Vegas with Tom doing his videos. What are you seeing elsewhere with the other groups?
So I know Reno Sparks Association, their president is doing videos twice a week and asking for guest speakers. Tiffany was on it last week. And Chris, they asked if you would be on it next week. I just got that email. So as state president, all the local associations are doing a great job reaching out to their members. Of course, Elko's experience with this lags behind about 2 weeks in what we're experiencing in other parts of the state. They're just starting to see a lot more illness in their area. I think everywhere people are very positive still about the market. This is a different kind of downturn, and there are some sectors of the market that are still very strong. I think across the state, people have seen some drop in buyer interest, and again, probably because some people have lost their jobs, and so there's not as many people out looking. But I think overall, people are still positive. We do have faith that the industry is going to come back when this is all over, and we're going to be able to keep buying and selling homes. The National Association of Realtors Economic Chief Lawrence Yoon stated that last year, in 2019, we had 1.4 million people, members in the association. In 2020, he thinks it's going to be about 1.35 million, not 100,000. So a little bit of a loss there. And that next year, again, we'll see a loss of another 500,000. And they anticipate the membership will be about 1.3 million people. So not a huge percentage drop. There will be some drop, but you know, like we've seen in the past, the first people to drop are the people who are not committed to working within their industry as well. So overall, I think very positive feeling about the market and the industry.
That's great. And from our call yesterday, it sounds like the residual from the March sales has lasted everywhere in the state, that Reno is experiencing a very hot market. I heard that Elko, because the mines were still open, their market was still fast paced. Of course, you know, still worried about the health crisis, but it sounds like business is happening everywhere, which is good. We did have a question that came in on the tenant landlord issues, and I think it's a great question that we're going to get a lot of. If the landlord chooses not to do a payment plan, can they evict the tenant at the end of the moratorium once it's lifted if the tenant cannot pay that rent?
So we've been talking to the different judges about how they're going to handle it. And so the governor has made it clear that there can be no late fees. And so the idea would be to accept, so for example, say your rent's $1,000 a month and the payment plan is $200 a month for for April and May. If they pay you $1,000 in June, you can't apply it to, even though you technically are probably applying it to the oldest balance. If they're paying you $1,000 in June, you have to accept $1,000, and then they would technically be current. And so it's going to be really tricky on those small payments, how to actually get them out. But if they've agreed to pay you the $200 a month and they, don't pay you the $1,000, then you can file the 7-day pay or quit. So I think it's going to be tricky at the first couple months, but I think if they're doing their best effort to pay you for that month, then it's going to be a lot harder to evict them based on that $200 payment plan.
So, but in that same respect, if it's $1,000 a month
Yeah.
and the moratoriums, let's say, is lifted in May, and they owe me now $2,000 as the landlord, and now the June month is now due, if I want them to pay all $3,000, and I think that what I've seen throughout the state is people are communicating, they're trying to help each other out. I have seen that across the board, and I've never seen that before. But let's say that for sake of conversation, you did have an owner that says, no, I want the whole $3,000 or else. They would still have the ability, if they couldn't pay it all at that point, to then evict them without interaction from the state?
I would say that a judge probably would not allow for an eviction at that point, because the governor's made it very clear, and the court in their interpretation is made it very clear that tenants need to work with the landlords need to work with the tenants on something after all of this happens. So I would say, again, if the tenant's paying for that month that the eviction moratorium has been lifted, trying to collect the past 2 months is going to be very difficult for a judge to allow an eviction at that point.
Gotcha. So it sounds like whether we want it to or not, the state wants us all to work together. Lana pointed out a good point that if we do create an addendum, at that point, like you said, at the end of all of this, and we set out a payment arrangement, that's kind of like creating a new lease with new terms. So it would be hard to evict somebody if you created a new agreement, because now the agreement would be in effect and active. So I guess that all makes sense, but the end of the story is they're looking for all of us to work together. And if the judge won't grant the eviction, you have no option with that tenant anyway. So I think that, something's better than nothing. And I think that, this too will pass. So makes sense.
And I do think once we see, like sometimes it's a wait and see. So once the first week or two of court proceedings happen after this is lifted, I think we'll understand a lot better how they're actually ruling. And, if they're late on their $200, if the judge is saying, okay, you're out. So I think that we'll see, I think that first week or two will be very telling.
Sure. And I think one of the other things that we've talked about a few times, and I'll move on to another topic, I think we beat this horse a little hard. It sounds to me that also with the landlord, we've seen a lot of work on the same respect that the AG's office expects for most mortgage companies to work with the landlord through that same process. Have you seen that as well?
Teresa?
We haven't had a lot of communication with the mortgage companies. That might be a question for them. Of course, that is absolutely expected. We have heard of there are some types of loans on a purchase that are kind of drying up. But overall, I think most servicing lenders that service loans have offered some kind of forbearance, some kind of relief. And again, as part of our reach that we have on the government affairs level, we are close with the Nevada Bankers Association, and they have been very good at directing the people who are members of their association to work with the mortgagees, the owners of the homes, to have some forbearance, some repayment options. So we have seen across the board, most of the banks have been willing to, or have been directed to, and indicate that they are supposed to work with the owners. But I haven't really heard if that is happening across the board.
I think I noticed during the governor's press conference, it was the first time we keep comparing this to 2008, which I don't know is a correct comparison because of the way it all happened. But I think during that press conference, I never remember state agencies saying, if you don't hear from the mortgager willing to work with you, call us and we'll call them with you.
Mhm.
So I mean, that is a completely different stance, which I think is good, but it'll definitely, time will tell. So let's talk about licensing in the real estate division. We noticed a misstatement that came out from the real estate division saying you can't show houses. We know that's not true. You can still show houses as long as you work within the COVID-19 risk mitigation guidelines. You cannot show tenant occupied properties. You can't force a tenant to do anything. What other things are you seeing from the real estate division, good information or things that we need to put people on the right path to?
So the first thing, of course, is your license renewals. If you're able to renew your license, please do. But the license renewals are extended for a period of 90 days after this is over. We have seen also, we lobbied pretty hard at the division to allow virtual CE credits as a live credit. And those are available for anybody. It doesn't have to, it's not just if your license is due today or next week, but if your license is due next December, you can still take advantage of these virtual education courses. I think Bondina did some that were really, well received. And there's some challenges. We ask for everybody's patience if they're taking those virtual classes, because it's kind of a learning curve on how to deliver real quality education on a virtual basis. That was a huge win for us as well. We also, of course, when the division put out a statement that wasn't exactly true, we know where they found it, but it wasn't exactly the whole story. And so we're working to help get that corrected, because you're right. There's no such thing as open houses anymore, but you can still show a house if there's no tenant in it on a virtual basis or on a one-to-one appointment basis. That's completely up to the seller. If there's a tenant in it, it's a no-go. You can still show those virtually, but nobody can walk into a tenant-occupied property. So we're working on continuing to refine that when there's questions that come up about, can I do this, can I do that? And of course,
questions right now, just because I know we're going to get it. This is just like we call in the legal hotline. So we've had some ambiguity with the fact that I'm in a current transaction before the governor's executive order came out. It was a tenant occupied property that we're in contract on. And now I need to do my inspection and my appraisal and the walkthrough. And what do you see? I mean, before it was, I've already made arrangements with the tenant. They've already scheduled it. They feel good about it. They're not upset. How has that changed now because of the executive order, and what should I be cognizant of?
So first of all, if we're just talking about a property that's already, you have the buyer, you have the seller, you're in transaction, you don't need to do a showing, it's done. There is nothing in the governor's directive that talks about anything except showings and open houses. Those are completely restricted. So a tenant occupied property for an inspection, for an appraisal, for a final walkthrough, those were not addressed in the directive. And by the letter of the law, there's nothing that restricts you from doing those, to having the inspector come in and do the inspection. Most professionals, whether it's an appraiser or an inspector, will be fully garmented to protect themselves and to protect the occupant as well. However, here's where we need the industry to step up. If you ask the tenant, hey, we have the inspector coming in, we need the appraiser to come in, the buyers would like to do a final walkthrough. If the tenant says yes, you're good. If the tenant says no and is reluctant to let you in, this is where you need to step up and find any other solution to your problem that you can. Because what will happen, you'll get the tenant that is really ticked off, who then will go to the governor and say, hey, governor, the owner of the property required me to let this person into my house and I hated it. I didn't want it. I'm sick. I don't want to get sick. I have my mother who my elderly mother who I don't want to catch this disease. And it could happen that the governor would shut those down for us as well. So we are asking.
Found there's a gray area there that basically says the inspector, the appraiser weren't really named as an exact showing by a real estate agent.
Right.
So you're probably okay to go forward with it because the tenant's happy. But if the tenant gives you any issue, then figure out another solution. So that's good news, because when that came out, that was not clear. So I know that's going to be good for a number of our agents to know.
Yeah.
Let's go to a different.
And I'll just echo. I think the whole point of that too is, look, we work so hard to make sure that you guys are still an essential service, and so, you know, I think you guys pulled some numbers. Our SAR pulled some numbers on how many are actually tenant occupied compared to the whole market. So the purpose is to just keep you guys essential and make sure that, you know, for the rest that are not tenant occupied, that you're still able to have access to the property, show the property, get in, close the deals. So so that's why we say that's a gray area. It's not, it hasn't been talked about, but we're saying work with the tenant, work with the tenant.
So the end of the narrative there is, don't be the one to screw it up for the rest of us.
Yeah.
Just want to make sure I'm clear. We have one other scenario that has come in that want to be clear about as well. We have a lot of scenarios where the buyer and seller wanted to complete the purchase, buyer got furloughed for their job, and the property's vacant. And so now the seller is open to renting that property to that buyer so that they can put them into it, so they have a place to live. The one thing to be cognizant of was that would create a landlord-tenant relationship between that buyer and that seller, so that if after this they couldn't close or it extended, they now would be protected by those tenant guidelines. Do you agree with that?
Yes, absolutely. Anytime you have a situation like that, it turns into a landlord-tenant relationship, and there's no caveat in the governor's order that talks about the eviction moratorium doesn't apply to those that purchased the house and are now staying, or your buyer. I think it could maybe be argued, if you have a good attorney, it could maybe be argued that that it does not fall into a landlord-tenant relationship. It's a buyer-seller relationship still, but the point would be having access to the courts to actually get that person out. You would have to use one of the provisions in NRS 40, and it probably would be holdover, and it probably wouldn't get in front of a judge. So I think that's where your hands might be tied. You could go for it, but I think the whole point, and this is again what we keep reiterating, the whole point of everything the governor has said is shelter in place, stay at home. So whatever home you're going to choose to be in, and whether it's allowing that the buyer or the seller to stay in a property, if that's where you're going to choose to stay, plan on staying there for a while. Sure. So I think that's what his overarching theme has been.
So I got one last question, and I think it's an important one as far as what it means to the individual members that we have in our brokers. And one of the great services that's provided by Nevada Realtors is our legal information hotline. And so I know from our conversations yesterday that not only are we trying to support our realtors and our brokers, but we do get a lot of calls from the public, and the public looking for help. And we want to show that realtors aren't about the commission or about, just making that dollar. They're about the community and the people. So tell us what the legal information hotline is doing to support that, and how we can use that for the issues that we're going through.
So I would say, and Teresa can add on after this. So, we're not set up or not staffed to actually handle, calls from the public as much as we've probably even been getting, because it's Crystal, who does an amazing job, who's part-time, and then myself. And so we do focus on the members. However, we found that it's really important during this time, as you've heard with all this unemployment, and, when people call offices and nobody calls them back, there's not an ear to listen to. So we've really tried to just really step it up. We always are, of course, very nice and friendly, but we want them to know that, if they have a problem and they do call us, that we're not just going to hang up and say this is for our members only, that we're going to say these are resources. Go to the Nevada Real Estate Division's website, go here, and just almost empower them in a way that they maybe feel lost, because that's a way that it shows that that the realtors care. And so Teresa can echo the fact that we're not set up to handle a lot of calls from the general public, but how we've been handling them as we get them.
Right, and the piece that's important is we're not in the office. So the calls come into the office, and we have a message there that says, please email info line at nevadarealtors.org. And that's how we're getting our messages, right? Is that did I say the right email address?
Yes.
Info line. And always when we had somebody that would call from the consumers, somebody from the public saying, oh, I don't know how to fix this problem, we have never turned people away. However, we're getting a higher volume, and we will explore expanding either Crystal's hours or getting another counsel if we start getting more calls from the public. I know that's something we talked about yesterday, is can we advertise this line to members of the public for right now. If there's a tenant that's having a problem, we want to help solve that problem so that the tenant doesn't go to the governor and say, realtors suck, and then our whole industry suffers for that. Because all it takes is one. It took one photo of a golf course and people, congregating on a golf course to shut down golf for everybody. So we don't want to be golf. We want to be a strong real estate industry that does the right thing in all circumstances for the public.
Well, we really appreciate your time today. I know you guys are extremely busy, and I know that this has changed the way that we do business completely. And so I appreciate your dedication to our industry. I appreciate all that you do. And thank you for keeping us open for business. And we appreciate that. I really appreciate it.
Thank you for having us. We really appreciate being here, and we're open. If anybody has any questions, give the legal information line a call.
And thanks for all you do as well, Chris. You've done an amazing job as our president this year, so thank you.
If you would have told me this would have happened, I would have considered it.
I wish we had a do-over year for you. But
I know, right? I wish I did. So just want to tell everybody, if you have any questions for either Chris or Teresa or Tiffany, please let us know. We'll get the information to them and get the response back. Again, we have our virtual office hours every weekday, 10 o'clock and 2 o'clock. We'd love to hear from you. And again, thank you so much for your time today. You all have a great week.
Thank you, you too.
Thanks.
Thank you, Brandon.